And welcome back to the Financially Simple Podcast. I'm your host, Justin Goodbread. Man, I got to tell you, for those of you watching on YouTube, I want to hold up the cookie. So we have a new advisor that joined our team by the name of Mr. Matt Williams, and the team here, the operations team, has been doing some stuff, and he sent this box of cookies to the office. I think I've gained 15 pounds this week. I mean, these cookies are delish. Brandon Jordan, colleague extraordinaire, is joining me today. Buddy, have you ever had these Pennsylvania cookies that Mr. Matt Williams ships out?
No, and I actually take notable exception to the fact that there were none that came my way to Massachusetts. I'm pretty sure there's some discrimination there.
You're going to have to reach out to Matt and say, dude, what gives, brother? What gives? I got to tell you, dude, these things, they must have a gallon of butter in them. They are so good. They're so good. Anyways, buddy, how are you today? You doing okay?
Better than I deserve. Today's better than yesterday.
You and I, we deal with business. We're business owners ourselves. We've been chuckling a little bit these last few weeks about how bizarre life is at this moment, man. Don't you feel like you're like in like this Groundhog Day almost?
I do, and I got to tell you, I take my hat off to the families out there with two working parents and little kids at home. It's a grind.
Well, that's what you and Kelly are dealing with. I mean, you both are working parents. You're in Massachusetts. You're in Boston area, just, I guess, north of Boston. Is that right? Just north of Boston? I'm sorry? South. Okay, I get confused. I flew in there. Anyways, you're in Boston area. So you guys are not like open for business like we are down here in Tennessee at this point.
No, it's definitely been a different experience than you guys. And there are times where I question, why are we here? But, sometimes plans are different than mine.
Well, I tell you all the time, you can move to the South, the Patriot state of blowing things up and shooting things here in Tennessee. I mean, that's who we are, right? We're open for business, man. I went to the workout at the gym this morning. There was not a person there with a mask on. They had the swimming pool open, the basketball court. They haven't quite opened that. They still had the water faucets closed. But don't worry, you can go to the bathroom and drink the water faucet in the bathroom. Don't ask me how that works. But anyways, we're getting back to open. We'll see how long this lasts with the potential resurgence now that's coming in the media as we're recording this in late June at this particular point. But hey, dude, we're not here to talk about COVID or any other life events. We're here to talk about success team. Absolutely. Now, let's kind of lay the groundwork, Brandon. I'm going to turn this over to you today, let you kind of walk us through this. But a couple weeks ago, where you and I are dealing with success teams, we're talking about the players on the field that we need as business owners in order to make our lives just rock star status, right? So we laid out this baseball diamond a few episodes ago whenever you and I dealt with this. And we talked about that the business owner is at home plate, right? And they are picking
on the pitcher's mound.
Pitcher's mound. I'm sorry. Thank you. They're at pitcher's mound. We talked about the CFP or their planners at the catcher's mound. They're throwing the pitches to them regularly. We know who they are, but then we automatically going to shift our attention to first base. Now, remind me who, now I'm not talking about the old Abbott Costello type of skit here, but who literally is on first base in our analogy.
Yeah, so two things, just to remind the listeners that, we believe that at our core, the right we can accomplish more than any I.
Absolutely.
So hence the premise of the success team, right? So building out the wrong we actually may accomplish less than the I. So we got to be diligent with this. So I like to think about things in baseball analogy. So in my mind, when I'm building out my success team, either for our business or for our client's business, I look at the CPA as being the forward-thinking CPA, big distinction there, as being our first baseman. And for me, it's for a couple of reasons. Number one is like by definition, we need them to be very good at defense, right? But I think, even the planning focus, the preparation focus CPAs are good at defense. But I also want the forward thinking because I also want somebody who's good at offense, thinking ahead.
Well, yeah, I mean, in baseball, we talked about this, and a lot of times the first baseman ends up being your power hitter, your cleanup hitter in the slot, right, at position number 4. And, I mean, they usually can jack that ball over the fence. That's typically where the first baseman – I mean, so many great first basemen in the era of baseball, especially here in the States, have been just like rock stars at first base. And they come in and they just smack the cover off the ball, dude. I mean, name
Absolutely.
a few. I'm thinking of Cecil Fielder. I'm thinking of Mark McGuire. I mean, I can keep going.
Yep. Up here, David Ortiz, although he was a DH, but, playing in the intra-league games, he's on first. But, I think about like something I've heard you say many times, like what is the single greatest wealth creation vehicle in the country?
Internal Revenue Code.
Who knows that best?
CPAs.
Maybe we want to have them on our team.
Absolutely. So let's think about something here. You mentioned forward thinking. I love
Uh-huh.
that term. That's something you and I we talk about a lot in the CPA world. What makes a good CPA, in my opinion, first of all, is forward thinking. How
Mhm.
would you define a forward thinking CPA?
So before I answer that, I think it's also kind of important to sort of lay out that not all CPAs are created equal. So you pass your CPA exam, now you're just licensed. And from there, usually you specialize, right? So in my mind, if you look up at the AICPA, there's lots of different specialties out there, just a couple. You got folks tax oriented, audit assurance. You can have an M&A focus. You can have a valuation focus. You can have a governmental accounting focus. If you ever want to lose your mind, go learn government accounting, right? It's fascinating. Nonprofit accounting, et cetera. So there's lots of different specialties out there. Not all CPAs do the same thing. So, okay, in my opinion, or in my experience, actually, not my opinion, forward thinking is all about, we all know that it's important to try to minimize our tax liability because taxes are an involuntary extraction. They are not a voluntary contribution, right? Okay. Tax avoidance, prudent tax evasion gets us in jail. We don't do the latter. Okay. So almost all CPAs, especially those who have a tax focus, are good at the preparation side, like the compliance, helping us minimize our tax liability for the current tax cycle. That's all well and good, but to me, that's the minimum expectation. I also think it's important for us to think about how do we mitigate our tax exposure for our remaining lifetime as well. So I want someone who's thinking ahead. The analogy in my mind that I thought about and I've shared with clients over the years is that a lot of CPAs, in my experience, have been only looking at last year's return. So to me, that's akin to driving while looking in the rearview mirror. That's great, except you may not get where you want to go. So to me, it's incumbent upon just always being willing to work with someone who espouses to be a forward-thinking CPA. I'm sure we could share lots of anecdotal stories about the negative implications of when that's not present.
So let me unpack some of what you just said. Okay. So we talked about that in the accounting world and in the tax compliance world, there are a ton of different type professions. So we have those individuals in the CPA or the accounting world that really all they do is compliance. They take the data that we give them and they put it onto a form. And there's nothing wrong with that. There's a major sect of the population who just really needs that. My mom, for example, she doesn't need to have some forward-thinking CPA. She's got a relatively easy retirement life. She just needs someone to just overlook the numbers, make sure that she's not missing a couple of key deductions, making sure the numbers are in right. Someone's there to communicate with her on behalf. Communicate with the service on her behalf. So she really doesn't need one of these razor sharp forward-thinking CPAs. Yeah, she can do what somebody's doing compliance, but man, we get into these specialty areas. I mean, we talked about taxes and audit and international taxation. I've dealt with some of those. Valuations, holy cow. I mean, that's especially forensic. That's some of the things that you've dealt with in your life. Mergers and acquisitions, government, nonprofits. I mean, nonprofits, they have a whole different position. Cost accounting, cost segregation, environmental. I mean, there's so many different specifications out there that we ultimately need somebody who is a specialist for our particular area, for our particular business at that particular time. And it's possible, wouldn't you think, Brandon? Wouldn't you think it's possible to actually have a generalist, forward-thinking CPA with this army of specialists they can pull off their bench that speak their same language that may come in and say, you know what? I need somebody over here that can help me with estate tax. I need somebody over here who can help me record the cost segregation study. I mean, so you may end up having several different types of accountants here in an average business. Is that a fair statement?
I think that's a very, very fair statement. So I want to go back to that. I actually do think everybody out there should have a CPA, even if it's just a compliance focused CPA. That's fine. None of us should be doing our own taxes. There's too much downside there, right?
I agree.
Too much opportunity loss. So I think everybody should have it. But for those of us who are, if we're the type of business owner who is looking to build a business that has transferable value versus just have a job with no boss, okay, because there's a difference there, right? Then I think it's important to actually have one of those forward-thinking specialists who has a team of other CPA specialists behind them, whether that's part of their organization or whether it's part of a network. To me, I want somebody that believes, we don't have to fight over, getting a client's revenue share. We win when the client wins.
Right. Right. So before we dive into let's identifying how it's forward thinking, I got one other question that I often hear, buddy. And that is, first of all, whenever I take on a new business owner client here in the company, I typically require them that they have a CPA. Oftentimes, many times their current CPA is really good at compliance, but not really good at forward thinking. And whenever I start having them speak with or having a client speak with a forward thinking CPA and they start announcing various strategies that they could implement in their business, I ultimately hear this question like, dude, they want to charge me X. So for example, we had this young dentist today that, he's a rock star. He's producing like twice as much as the national average in production. Killing it, taking home like $800,000 a year take home pay as a dentist, just rock star. By the way, friends, those of you who don't know, the average dentist makes about $170,000. So he is a rock star in the dental world. There's a few out there that do $400,000 or $500,000, but this guy's smoking. We get like to looking at his tax returns. I brought in one of these forward-thinking CPAs, and he's like, boo, we could do this, 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 this. He started naming all the things that this particular young individual was not utilizing. And then he said, here's my bill. And instantly, this young guy said, holy cow, this guy's expensive. I heard this statement a long time ago. If you think professionals are expensive, just wait until you pay the bill of an amateur. Okay.
Absolutely.
So, why is it that these forward-thinking CPAs, the ones that most of our razor-sharp business owners employ, why is it that they are not cheap? Use that term cheap there, like so many business owners typically say.
Yeah, so in my mind, I like to try to distinguish between, price shopping and value shopping, right? So those forward-thinking CPAs, like they got there for a reason, and it's usually because they've made some oopses along the way somewhere, right? So we're not paying for their time, we're not just paying for their time, we're also paying for their experience, right? So paying some of that money on the front end to prevent an oops on the back end, that to me, that's worth its weight in gold. I've heard it said differently than what you just said, wait till you pay the cost of an amateur. But in my mind, the most expensive CPA is a cheap one.
Absolutely.
It's like our friends who in the past have used, I forget the attorney's name, Mr. LegalZoom, rarely works out well.
Yeah.
But I also think it's fair to acknowledge, or it's important to acknowledge, think about it when you first launch Heritage, right? You need a CPA, correct? Yep. We know, all business owners, we know we need it. We can benefit from it. But you're just starting a business. We are very cash flow sensitive, right? So we go most times to whomever says yes at the cheapest term. And so then right from day one, we conflate cheap with valuable, but there are times where we just outgrow that. I like, in my mind, or in my opinion, I think it's valuable to have that expert that has a team behind them, because to me, it scares me when there's a CPA who holds him or herself out to be knowledgeable in all facets of the IRC, right? It's no different than like a CFP. I can't be good at all the elements of financial planning. It's not possible, right? Being good enough to be dangerous is by definition dangerous.
So let's dive then into this question of what is a forward-thinking CPA. Whenever I think about things, I look at this idea of planning focus versus preparation focus. I think that's a well-defined terms here. And man, let's go back to this young client I was talking about this morning. He's making $700,000 profit after all the basic expenses. And here we have, and by the way, his tax bill was almost $200,000 on the federal side. Almost $200,000. Think about it. Almost $200,000 in federal taxes, okay? Not including his state taxes and his local taxes, just federal. A forward-thinking CPA looked at his returns and said, we could do this, 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 this. Now, we may not be able to capture them all this year, but over the next 2 years, we should be able to bring your tax bill, if all things being equal, and the code stays the same without any legislative changes, we should be able to bring it from like 200,000, 190 some odd thousand, down to about $60,000. Dude, that's like forward-thinking rock star status, right?
Yeah, I think so.
How would you define this planning-focused individual? I'm sure you've dealt with ideas and anecdotes out there that you've seen.
Yeah. Excuse me. So I think one way to help folks identify is to describe some of the things it's not.
Okay.
So, unfortunately, multiple circumstances since 2012, I've seen evidence where a CPA has suggested to a business owner client that's had a decently profitable year to go buy a truck, right? Go buy a truck. Well, Right. Well, I think that's a 179D expense, right? We can expense it in the current year depending on meeting some metrics. Well, that's great. That's all well and good. You spend 50,000 on some truck somewhere that's now worth 30, right?
Yeah.
Call me crazy. It's really hard to build wealth, to build something of value when you buy things that decline in value.
I got to jump in right there, dude. I was riding. I actually wrote about this in my book, The Ultimate Sale, talking about this individual that I know, love, and trust. I mean, great client of mine. He reached out to me about 6 years ago. We're riding down the road and riding his truck, okay? Yeah. And he said, man, I want to get out of this thing. This thing's waiting on me. And he had that typical been just weary from business, right? And we all get there at some point and just having a bad day. He said, man, if I could sell it today, I would. And I said, well, talk to me about your financials. He said, what are you kidding, man? I run my life on a napkin. I said, well, your CPA doesn't give you updated financial records? He goes, no, I just come in at the end of the year and he does my taxes for me and he depreciates everything and I pay no taxes. Dude, I got to tell you, he had $2 million in hard equipment that had been depreciated to a zero basis. Now, the business wasn't prepared for sale in any way. Whenever he goes to sell this, quote, equipment that has a zero basis depreciation schedule, he is going to pay ordinary income tax when he sells that equipment. So he had been pushing his tax liability down. Now he had this idea, I'm going to turn around and sell my company for $2 million plus. He was saying equipment plus goodwill. He said, I'm going to get $3 million, which he couldn't at the time. We built it up pretty good over the last 5 years. But he's saying, Justin, man, I'm going to sell this $2 million equipment. I said, buddy, you're going to lose half of it. You're going to lose half that value based on the ordinary income tax rates. And he just almost hit the fan, dude. He said, why didn't my CPA tell me to do that? Because your CPA was so focused on minimizing the taxes. And candidly, you never paid or hired a CPA to go forward thinking to show you how to prepare this. His CPA wanted to. His CPA, the minute that we had this conversation, I talked to the CPA. I said, man, brother, we want to get out of this thing in about 7 years. I really need some financials. I need to start putting out, just running basic like we and I would expect CPA work. He's like, thank God. I've wanted to do this for years for our client. Mm-hmm. So when you said buy a truck, the CPA had actually told him, don't do this. But because he was so hell-bent on reducing a tax bill, he put himself into a hole now that we've taken. Now we've dug out of it about 6 years' time. But had he done things differently, he could have been retired by now.
Yeah, so I think the takeaway from this is that, for those, because there's a lot of clients who do what your client just did. Like you show up at tax time, you drop off a box full of whatever, and you let your CPA work their magic, right? Mm-hmm. So that is by definition compliance focus scope of work, not planning. So I want to be careful that doesn't necessarily mean the CPA isn't capable thereof. Right. Yep. I think as a business owner, we should then go ask like, hey, Mr. and Mrs. CPA or firm, is this something you can help me with? I actually want to start thinking ahead in the future. Right. And some CPAs may say yes and they shouldn't. Some may say no because they know that that's not their scope of work. So my point is like, just because you may not have been not yet receiving that type of service from your CPA, let's not yet determine that they're not there yet. Right. We don't need to make a wholesale chain yet.
Right. So let me ask you this. If you have a business owner out there and they're listening to this thing and say, man, Justin, Brandon, I'm not sure my CPA is forward thinking. I'm not sure that, I'm listening to this little story just of trying to reduce my tax bill, buddy, I'm just not sure. How would you go about directing a business owner to identify a best-in-class or a forward-thinking CPA? What points would you share with them in that particular question to give some guidance in that area?
So my first step would be, if they happen to be working with, some professional who does like value growth or exit planning or CFP services, ask him or her or ask them, right? Odds are those folks with experience have determined the CPAs who are forward thinking versus those who aren't. That'd be my first step. Okay. Step number 2 would be, I think, have a hard and frank conversation with your CPA, right? Because I think you can tell a lot about a CPA by the questions that he or she asks you. Right? If it's all about receipts and last year versus like tell me where you're trying to go with your business, that's pretty telling.
Okay? Whenever you say that, I was talking to one of our forward-thinking CPAs that we recommend smaller businesses to, and he makes this statement. He says, hey, when's the last time your CPA brought you a tax-saving piece of advice? He said, when's the last time they came to you and said, here's an idea on how you can reduce your taxes before they ever get into the filing of it? He said, that's how you can tell. That's from a CPA who works in that industry.
Yeah.
Yeah. What other ways might you direct people to look for another CPA?
So I think small business owners, flock together. We love to hang out together, bounce stories off of each other, et cetera. I'd start there because odds are, and I'd interview 5 or 6, 7 or 8, 9, and 10 and just ask them, like, do you think you have this? And if so, like, why? And would you be willing to make an introduction? I think step one is, value growth, exit planning, CFP focused professionals. Number 2, ask your CPA. Number 3, ask your network. Okay. It's, to me, those are the 3 best ways to make sure we don't have some oopses with who we bring into the team, because changing your CPAs is a challenge.
I remember telling you a story about this particular CPA in the last few months. I had a client who needed to do some tax planning. And with the education that our team has, we had identified some tax planning opportunities. Now, we don't give tax advice. So we said, let's talk to your planner. Let's talk to your CPA. Let's sit down with them and let's show them the data points. So in order to save some embarrassment for the CPA, I had a private conversation with the CPA. And I said, hey, here's some strategies that our team of advisors, CFPs, MBAs, various credentials out the yin yang within our organization. So here's some analogies or some ideas so you can reduce the tax bill for the client. And here's the result if we do this. And the CPA, I'll never forget it, that individual leaned back in their chair and they crossed their arms and they said, this is interesting. I said, okay, cool. What do we need to do to move forward? And they said, I'm not going to recommend this. I went, what do you mean you're not going to recommend this? Well, I didn't think about it. Well, what do you mean you didn't think about it? So, no, you don't understand. I didn't invent this. And therefore, if I go to the client validating what you told them to do, you being the team of Heritage told them to do, even though it's going to benefit them, I'm going to look like I don't know what I'm doing. And so I call that the not invented here syndrome. Mm-hmm. Brandon, I got to tell you, that's the Achilles heel in the accounting world that I often see. I think the biggest thing that I see is an individual is opening to listen and entertaining thoughts.
Yeah, I would say another phrase I've used in the past is being professionally receptive themselves. Okay, because sometimes, like I think we'll bring on one of the CPAs to be interviewed that I've worked with for 5 or 6 years, and I actually very much enjoy working with him because we come up with some pretty cool solutions, and neither one of us get myopic that, oh, I didn't think of that, my client may think less of me. At the end of the day, we win when they win, when the clients win, right?
Yeah, I remember. So one of the questions that I often ask when I sit down to interview CPAs is I ask a question. I go very technical, very fast. I ask the question, so let me ask you this question. First of all, in your particular state, is charitable remainder trust accounting considered cash receipts for income? In other words, can I shift an ownership of a CRUT, or can I have a CRUT or an MCRUT own passive interest in an LLC or limited partnership? And at that point, if their eyes glaze, I know they never thought forward thinking. If their eyes don't glaze and they say, okay, go a little deeper, then that means they're receptive. I typically throw out very interesting, very technical information to see what they look at as I'm interviewing them, to see what their eyes say, almost like throwing mud up against the wall. And candidly, Brandon, many times I give very incorrect information, knowing that I know the code, you know the code. I get a particular piece of it, I throw it incorrect to see if that CPA actually is going to validate or even understand or reject what we're saying. It's just a trickery. I remember sitting down with, I believe, the individual we're going to have on the show here very soon, and I asked a very targeted question. And he leaned into me, which doesn't happen often. He said, Justin, not only can you do that, but you can do this and this and this. And if you go this way, you can go this. I was like, dude, Rockstar here. So, that's not something the average business owner would know, but that's something that whenever the planners in our world, because we speak the language, we can throw curveballs or straight or right, throw a fastball at them and see if they can handle it.
Prior to meeting and joining with Heritage, when I was meeting with other professionals, whether it's attorneys, CPAs, et cetera, I'm trying to feel like, do I want to have them as part of my network and serving clients? To me, it was always important to understand that clients don't come to the professionals necessarily just looking for information, right? So I think sometimes when somebody asks me a technical question, my natural instinct is to show that I know it, right? And I think we can do ourselves a disservice there, because I think at the end of the day, people are really coming to us to be willing to find a solution versus just try to regurgitate information. So that is what I'm looking for when I try to build out a success team for our clients. Are the professionals professionally accepted and solution oriented versus being information oriented?
So let me see if I can bring this plane to the ground. Let's recap today's conversation. So first of all, we believe that you need to have a forward-thinking CPA. You need to have a CPA who plays offense and defense. Defense being compliance, offense being looking into the future, trying to figure out how to mitigate and minimize tax liabilities legally minimize tax liabilities. We realize there are many, number two, we realize that there are many types of professions, different types of CPAs within the profession, I should say. We have those who work on tax mitigation, audits, taxation with international value, international position valuations, mergers and acquisitions. I mean, it goes on, various types of professions. We also realize that if we're going to hire a razor sharp CPA, that they're not cheap in the terms of dollars. They're a little bit more expensive, but they're high in value for what we receive. As I illustrated with a client even this morning, that was $100,000 plus in savings by having a razor sharp CPA. We realize that they're planning focused versus preparation focused. They're more looking forward, as we talked about. We talked about the individual who the CPA had been deducting through 179 their equipment. And the CPA had wanted to help them for years, but the business owner wouldn't let them. So we realized that there's a lot of knowledge out there in the CPA world, and by no means are we beating up on them in any way. In fact, we love our CPA friends. But ultimately what we're looking for is a best in class. We want that CPA, the best CPA our dollars can afford, that individual who is going to be receptive to the information that the team, the attorneys, the insurance, the planners, the value growth, all the various members on our team that we're going to be chatting with, we want them to be receptive, almost like throwing mud against the wall and seeing what sticks at the end of the day is the way I often say it. That is a forward-thinking CPA. Did I grab the tenor of our whole conversation thus far?
I think so. I think it's a very good depiction of what we're looking for.
Well, Brandon, on our next series with the success stories, we actually have a razor sharp, forward-thinking CPA going to join us. In fact, he is going to listen to this podcast probably before he comes on. I'm going to go ahead and warn you, Tom, better bring your A game because old Goodbread over here is going to have some fun with you. Nah, I'm just joking. We're going to have a razor sharp CPA who's going to come in and talk about their perspective on what it means to be forward-thinking versus compliance and some of the stories that they've seen by not having forward-thinking CPA. So, Brandon, aren't you excited to have him on the show? I believe I lost Brandon on my stutter here, but Tom is going to be coming on here in the next couple of weeks to help us out on this particular show. Friends, until then, look, I realize that life is hard. I get it. Life is hard. I realize that life is frustrating, but life is good. In our next show, Tom's going to come on and he's going to talk about how a forward-thinking CPA can help us make our business a lot less frustrating and a lot less horrifying. Trust me, these guys are good. Guys and gals, the forward-thinking CPAs are rock stars. So look, friends, I realize life is hard, life is good, life is frustrating. Money doesn't have to be. We're going to continue to make our lives at least financially simple. Until next time, hey, y'all go out and make it a great day and stay tuned for our forward-thinking CPA who's going to rock the house. Take it easy, guys.